We do the search. Nobody wants to do the search. The searching's hard. Like you're coming in at the very front. Like everyone wants to be there at deal time. Deal time's great. Everybody gets paid. Like whether you're representing the seller, you can get a big commission. Accountants, the lawyers, like there's all kinds of money to go around when you come to deal time. But during the search, there really isn't. So no one wants to be there. So it's like doing the work that others don't want to do.
Welcome to the Before You Buy or Sell a Business podcast, where we help buyers and sellers learn more about the acquisition process, discuss recent transactions, and stay up to date on the latest news in the market. Here's your host, Jared Johnson.
All right, welcome back to Before You Buy or Sell a Business podcast. Today I have Mark Fleming on, and Mark is a little bit unique. He works with investors, does all sorts of things on deals, also brokers and refers deals. So happy to have him on and kind of get a little bit of a different perspective than what we normally see. So how you doing, Mark?
Doing great. How are you, Jared?
I'm doing well. Thank you. So maybe we can kind of just quickly jump in. So the way I met you, I saw one of your videos on TikTok and I said, hey, this is exactly what, we're kind of looking for in the industry. Maybe you can talk a little bit about what that video was. And I believe it kind of blew up and became sort of famous or, went viral, I guess you would say. So I reached out to you, said, hey, I'm an SBA lender. This is what I do. I would love to work with you. And we kind of took it from there. So maybe talk a little bit about that video and then we can kind of get into your background as well.
Yeah. So that was a great video. So I think that's when the new, I guess at that time, a new SOP came out that, lowered the down payments. You could go down to the 2.5 instead of the 5 and change the standby period for the seller notes. So I think we were the first people to talk about that on TikTok. And it really took fire. So we made a video kind of talking about that change, what that meant to your down payments. And I think that video got 100,000 views in the first 4 or 5 hours, which was like the best and the worst thing that's ever happened to us. Because back then we typically, we had about one person that would approach us a week or so. And like we try to always be pretty client friendly. So the earliest meeting on my calendar was 6 a.m. And then the latest was at 9 and all in between. And in that 4 hours, like my calendar filled up for the month. And, most of the people didn't show. We ended up with a few good people. So people that, I think we've closed loans with together came from that video. But it was just nuts to what it's like to go viral. And, we've put some qualifications before we put someone on the calendar now. It was definitely crazy. And I think you reached out and, said, hey, I'm an SBA lender. And I'm like, hey, we need SBA lenders. And then I think you helped us with a pretty tough deal that we were working on. And then we've done several deals since then.
Yeah, it's been a fun ride. We can probably get into a couple of those kind of in a, broad way of looking at them and try to be as kind of PC as we can with them. But okay, so maybe we can back up a little bit. Let's talk a little about you. So how did you kind of get to where you're at now? Where'd you grow up? Where'd you go to college? Is this what you've always done? Maybe give us a little background.
So I was born in Bartlesville, Oklahoma, in the oil patch there. And then we moved out to Akron, Ohio, and just kind of moved around Midwest after that. We moved around Northeast Ohio a few times. My dad was a research scientist, and every time a recession comes, they cut research first. So he'd go and find a new job, and we'd move somewhere else in the Midwest. Eventually, he started teaching at Western Michigan University, paper printing and engineering. So he moved up there, went to college there, majored in economics and finance. Always kind of knew, really back then was more like an investment industry that I always wanted to work in. My brother's 14 years older than I am, so he kind of led the way for me. So I hung out on trading desks. So in high school and college, I spent my summers. UBS had, back then it was the largest trading desk in the world. It was 4 football fields and they traded like $4 trillion a day.
Whoa.
In that one room. So I kind of grew up around that and, always wanted to be a trader and did that, went and became a trader after I graduated college, but realized like moving just, stocks back and forth wasn't really necessarily what I wanted to do. I cared more about like the actual business and how the business was run. So I moved into it, what would be called equity research. So I primarily covered like large cap stocks. So, throughout my career, I've been an analyst covering, every sector, tech, financials, real estate, everything but healthcare. And, so when you see someone puts, when they say this firm has a buy or sell rating on it, that's the equity research analysts. They're the ones that put the targets on stocks. But we did it on what they call the buy side. So you manage a mutual fund or a hedge fund. And so basically, I've just always been looking at businesses and breaking them down and, trying to decide whether we want to own it. And that kind of fell into we created owner actions almost on accident after we were buying businesses ourselves, my wife and I. We had a cleaning business with my brother. We were actually in contract to buy a child care center right when COVID hit, that fell through because of COVID. But we really wanted to make something to help business owners, so we created, it was originally a digital resource. So you'd go in, you'd fill out 20 questions, and it'd tell you how to start, scale, or sell your business. And it was really detailed. So, like, if you wanted to start a restaurant, you'd give the overview of your restaurant. It'd give you the 185 things you need to do to start a restaurant. A lot of people signed up, but then when people see there's 185 things you need to do, they just don't do any of them. And it somewhat bombed. And I wish I knew, like, Jensen Huang, the Nvidia founder. He has a saying that if he knew how hard it was going to be, he never would have started Nvidia. And he thinks that, like, the one of the biggest, like, advantages that most entrepreneurs have is that they don't know how hard it is going in. And basically, our list just told people how hard it was before they started, so they didn't start. But through that process, we got asked for help a lot. We started to figure out, like, how are we going to market this? Get eyeballs, get people to our business. So we started breaking down listings on Biz Buy Sell, and then people kept coming and asking for help, and we finally said yes. And that's kind of how this company got started. So, like, we never had a business plan. We never intended to become what we are. It's just we just along the way found, like, what people need, and then we fulfill the need.
Yeah, that's awesome. You let me go back a little bit for a second. So you said something that was very interesting. You essentially told people how hard it is to start a business, and it kind of made people nervous and didn't want to move forward. I kind of laughed at that because I feel like a lot of times when I'm dealing with a seller, I'm kind of scratching my head like, how did they get into this and how did they get this far? Because, especially ones that are older, right? They haven't kept up with technology or anything. The business has done phenomenal, but I usually kind of laugh like, how did they get to this point? And I've sort of developed my own theory that they didn't have that crazy financial mind and understood kind of the downside. So they weren't scared to go do it because they couldn't look at it and say, well, what if this goes wrong? They just looked at it and said, well, I'm just going to go do it because they didn't know better. And so then they moved all the way through, got the business, on its feet, and maybe a little bit of luck, probably a lot of hard work, but they got it to a point where it was very successful. But then you throw in other people that have really good education, really good experience, and I mean, like me, I mean, I'm trained to look at the downside on everything, right? I'm trying to find the risk and trying to find the problem on a deal so that I can mitigate it and make sure that it works and that the bank's going to get paid back. So we look at things very differently, where those type of people look at it and go, "Oh, no, I could do that, it's fine." And then if you would have told them there's 185 steps, they probably wouldn't have done it, even though they probably completed 185 or more steps and got the business to where it needed to be, but they didn't understand. So it was a little bit of like ignorance is bliss, I guess, when you're starting a business. So
It definitely is, and I think having also worked in wealth management with a lot of people after they've sold their businesses, and I think most searchers might be, like, horrified that most sellers that sell their businesses for 10 to 20 million, like, they don't know what an LLC is. Like, they don't know what an S corp is. They don't know any of that stuff. They don't understand their financials. They just know there's cash in the bank and their customers keep calling, and their employees aren't quitting. And if you have those three things, like, that's really all you need to know.
yeah, it's wild. So, okay, so fast forwarding now to where you're at with owner actions, maybe give me just a real quick summary of what you all do.
Yep. So we're almost, in a way, we're like professional searchers. We kind of, I guess I've always had a view, you want to be there for people when they need you, not when you need them. So we really come in at the hardest part, which is the search. So basically, what we do when someone comes to us, we form a new partnership that we've decided to work together and try to grow that partnership and acquire a business. And we'll go through what we call a get to know you process, where we have them go through BizBuy, BizQuest, send us everything that they find interesting, And then we have a call with our buyers, like, besides the money, like I don't care about the money because everyone's like, oh, this one makes 500,000 a year and I want to make 500,000 a year. Like, besides the money, what interests you about this business? And then we kind of learn about them. We learn their skills. My partner Katie is like she's become the perfect matchmaker for people in businesses and trying to find the right business for that person. And then once we have a good idea who they are, what they're looking for, we go out, we start searching. We do, combination of on market, off market. If someone's really targeted, we'll do more off market. If someone's more broad, we'll do more on market. Find the deal, negotiate it, help with the loan, do everything to get the deal closed, which, as you know, is a lot. And I had a lot less gray hairs a few years ago. As you know, it's a very stressful period, which sometimes I don't know if it's good or bad. I feel like we bear a lot of the stress, which sometimes I don't know if that's like taking something away from our customers, that you somewhat you bond with the company in a way as you're going through the fight. A lot of times we'll just fix a problem and then we'll call our partner and say, "Hey, we had this problem. Deal was dead for about 24 hours there, but we fixed it." Like, I talked to Jared. We're back on, and we'll do things like that. So get through the close, and then in lieu of any cash compensation, we're an equity owner in the business, so we really just want to see it grow. So we have started adding centralized services that can help the companies. So we have the financial management. So we'll do bookkeeping and analysis. We're doing payables, receivables, payroll for companies. Whatever they need. We've been hitting receivables really hard the last few months. We've noticed like people aren't paying their bills. So our team's been going out and helping with the receivables. So we kind of just try to do, whatever we can to help them. We've added a new person. We call him kind of business optimization. So he's going to end up doing building websites, marketing funnels, bringing in AI automation. So coming in through the businesses and trying to find ways we can cut costs and we can grow revenue.
That's great. Yeah, so you pretty much have like a full suite of, kind of business products that are needed within the business to help it run smoothly. It's funny you bring up the kind of accounts receivable position. I feel like a lot of people don't realize how important that is on a business. And it's one of the things as a lender we look at from a seller standpoint. We'll look and see, okay, give me the accounts receivable aging report. And if they've got a lot of stuff that's kind of out there and taking a long time to collect, we're going to really dig into that and try to understand, is this normal? Are you giving these people this amount of time? Are you just really bad at collecting? And then what's going to happen when you come in and you kind of flip that and say, well, you're supposed to pay in 30 days. I'm going to have to kind of hold you to this. Are you going to lose the customer? Is that going to be okay? And then on top of that, working capital is probably the most important thing, especially in the first 60, 90, 120 days. And if they're used to collecting at 120, 180 days because they just don't get around to it, how long can you actually sustain that? And so I'm glad to hear that you've got a lot of the services kind of figured out and you're helping out the customers. One of the most important things for us and the things that kind of worry us the most is most of the time you have a brand new business owner. They may have ran a division at a company in corporate America, or maybe had some P&L responsibilities, but they haven't basically been responsible for payroll. And so, what we like as a lender is when we're working with someone like you, you're going to come in, keep an extra set of eyes on that business. You're going to help them with all the different things that they're going to need, like the receivables, payables, accounting, bookkeeping, all of that kind of stuff, and make sure that you're sort of helping us as another set of eyes to keep the deal moving and make sure the business is going to be successful. So we may have a deal where we're a little nervous on the front end, but then we can kind of say, oh, wait, they've got people there that know what they're doing, that have the systems in place that are going to kind of keep them on track. And so it becomes a good benefit for the bank, and it's almost like a partnership, the way we kind of look at it. So I'm sure that probably helps you when you're kind of having those conversations with a future operator or partner as well. So
Yeah, it's interesting. We get all kinds of like I said, we never planned to do this, so synergies that we didn't expect. So like the biggest one is one just getting through the door with the brokers. Like, so obviously the broker, if you say you've done lots of acquisitions and you know how to get deals closed. And, we're working on one with a kind of a tough broker. And he's like, well, we want you to work with First Internet Bank. And it was literally, he's one of your peers. Like, and I'm like, well, we work with Jared. We've done a bunch of deals with Jared. And he's like, oh, okay. You do this. So that gets us like right to the top of the pile. And I think on that one, I'm not sure we're the best offer monetarily. But we've got a partner that's going to go in and operate it. It's a restaurant. He's got 20 years restaurant experience. Been in every role, and they know that we know you. So, if he knows Jared, he must know how to get loans done, type thing. So it's helped kind of move us to the stack that even though there's other people bidding on that business, I'm working on that deal today. Hopefully it'll go to us, and it sounds like it's going to go to us. And this, like you said, with the bank, it helps too.
Yeah, it is. It is kind of interesting because when we started with the bank, 4.5 years ago or so, people kind of like, "What? Never heard of that bank." And so it was tough to get in. A lot of people knew me just from doing it forever, but now we're starting to see that people, oh, that okay, I've done several deals with them, but it's the same thing with all the brokerage community. I mean, I had a deal recently, and the guy's kind of like, "Oh, I don't really know you," and I'm like, "Oh, do you know this person, and this person?" Yeah, call them and then they'll call me back. Hey, okay, cool, we'll work with you. Like they all said great things, and they're kind of well known within that brokerage community. So a lot of it is time investing and kind of proving out your theory and getting stuff going. You had mentioned at the beginning of that you kind of learned as you're going. So probably same thing. You didn't realize there was 185 steps into this, and you just kind of fell into it. So it's fun.
Yeah. Yeah. I mean, there's something new on every deal. Like it's
Yeah.
never, every time I tell somebody, I'm like, it's going to get stuck on something and I don't know what, because it's never been the same thing twice.
Yeah. So, that was going to be kind of my next question. So, what are some things that you see where a deal does get stuck, and maybe just one or two things that are kind of common? And what kind of advice would you give to somebody that's looking to kind of overcome those hurdles?
Yeah. I mean, the first thing that I look at that's like a deal killer, like, should we just stop is obviously make sure you actually see the tax return, that it matches the numbers, and then the trailing 12 period. Because you can tell if it's falling off a cliff, the deal's not going to work. And, they put the sim based off the peak numbers and it's come down. And, you should probably just go pencils down and move on. Or at least in those times, usually we do a call with the seller. It's like, here's where the business is now. This is what it's worth now. They usually don't want to sell for that price. So, the quicker you can just move on to the next, the better. I mean, I think probably the most common is on the legal side, and especially when the seller's attorney gets brought in. I think everyone has their incentives, and the seller's attorney wants to rack up billable hours. So they always seem to find a way to get the deal stuck. We typically find the sooner you can get both legal teams on the phone together, the sooner the deal is going to happen. And sometimes I don't know, both sides are resistant to doing that. So it's like I'd like to have that day one, but it usually doesn't happen day one. But the only way to really get the legal process unjammed is to have the two lawyers talking directly to each other, or just get everybody on one call. Because most of the time, it's almost always a misunderstanding, and it's usually not like a real issue. It's just like, oh, you're interpreting this clause different than how I'm interpreting this clause. And although I think we worked with you on one deal where the seller's attorney wouldn't let us talk to the sellers anymore.
Hmm.
And they also told the seller not to talk to their broker anymore. And we're sitting there like, this is a communication problem. Like, how are we going to fix a communication problem if we can't talk? And I think that added like 3 weeks to that deal, at least, before we kind of back channeled it through to kind of open it up. And the seller's like, well, we don't want this either. Like, we want to work this out too. But the lawyer just wanted to gum things up. So like those are like the most common. Then it's just the random things, right? Like with the idle loans, things getting stuck there. I think we've had that. Sometimes getting licenses takes time. So if someone's like right on the edge of getting their HVAC license, sometimes that takes longer than you think. UCC issues, you probably got a much longer list than I do, of those types of little things that just seem to pop up right at the end that there was no way for you to know it was coming.
Yeah, definitely. That it's been weird the last like month or two. I've had at least three where they filed their tax returns, but the IRS didn't recognize the S designation, and so the returns are literally sitting there as being received, but they didn't process them and file them. So when we go to pull a transcript, they're coming back as nothing. And then when they call and spend 2 hours on the phone, they finally go, "Oh yeah, we have your returns, but we didn't verify your S designation, so we can't process the tax return this way." And we're like, Why didn't they do that?" And then it just keeps happening, and so it seems to be there's always something going on, and it almost rotates to a different problem. It never is just, "Can we get 6 months of like something smooth for once, please?"
Yeah, like
So
I've never had never had a smooth deal. I mean, we had one that we kept thinking was going to go smooth, and then it ran into a bunch of problems right at
yeah,
the
I
end.
always say you get
Uh,
one per year. That's it.
yeah,
So do 70, you'll get one. That you're like, "Oh, that closed. Okay, cool.
yeah.
Forgot." So, all right. So when you're talking to a potential kind of partner operator, what are some of the major things that you're looking for up front, and sort of what would be a red flag to you when you're thinking about how they're going to work well with you and then with any investors?
So we're usually looking for someone with some type of specialized industry skill. So we want to see management experience, and we want to see some sales experience, and typically some industry experience. There's sometimes that we might be able to work with the transferable skills, but for the most part, we're looking for kind of direct industry. What we will do, I think, when we've done together, we had someone with some IT experience. We bought a large porta potty business, and it's like, well, really it's just keeping track of the assets, and that can be an IT problem. That's really what we look for, and just to be like good people. So like that's one thing, so we have 7 people on our team now, and my partner Katie, like she's like, I'll never give up the partner relations, because if someone's a jerk, I want to know, and so that we can just kick them out. Like we don't want to be partners with someone that we're forming long term partnerships. So if someone's a jerk during the search process, they're going to be terrible to work with on the ownership side. So that's something that she'll always keep a tight grasp on. I mean, really, the big red flags. I mean, it's the they just hypocritical for being the TikTok, but someone that just watched a social media video and wants to go buy a laundromat, or thinks they can go do the absentee run. They just graduated from college last year, and they're going to go buy the HVAC company and run an absentee. So that's the buyer that we don't want to work with. And sometimes we usually try to steer them in a different direction. I mean, it was really interesting. Someone came to us. He just graduated from Princeton with a computer science degree, and he wanted to buy laundromats. And it's like, no, dude, like you need to go automate businesses and like set up a consulting company. Like probably the next big wave is implementing AI throughout businesses, and like you're perfectly set up for that. Like don't go do laundromats, like go implement AI in businesses. So luckily he listened, and he and his brother, and they've done a couple jobs for us within our portfolio. So like getting them started and doing that instead.
Yeah, it is interesting how social media is sort of, I mean, I guess in general, altogether, social media tends to kind of show people at their best. And there's oftentimes stuff there that's not very accurate and true. And it's unfortunate because we get people in that situation where they see a video from some famous influencer that says, "Oh, I own 7 businesses and, I make $2 million a year and I just hang out with my kids and I don't really have to run the business." And that's so far from the truth that it's crazy. And it's sad because somebody goes and says, "Oh, I can do this." They buy a business, it fails, they're filing bankruptcy. I mean, your whole life's ruined at that point, all because somebody wasn't being transparent and authentic. So yeah, unfortunately we all kind of have to weed through those people. I do feel like in the last year or so it's gotten better, and we're not seeing as many of those people. So if anything, it makes our time a little bit easier because we're not having to try to educate and explain to people that's not how the business world works. So hopefully it stays that way.
Yeah, and we kind of watch for the people too, that this is the thing that's going to save them. It's like the anchor baby in a marriage. Like, you're in financial trouble, buying a business to like fix your financial problem is not probably not the way you want to go. So we watch for that too.
Yeah, I always feel like there's so many things in business and especially acquiring businesses that are very much like a relationship. I mean, you already said it before. I mean, communication is probably the most important thing in any relationship, marriage, right? And then same with if you're having problems in another, they don't go try to save it by doing something worse, you know. So yeah, it is funny. Like I keep joking that I need to do this full on like presentation about how comparing relationships to the acquisition process, and maybe I'll do it one day. So I'll use some AI to help me out or something, but
Yeah.
it'll be fun. So now that you've done, quite a few deals, what would you say are the hardest things for a buyer to deal with in the first, 3, 6, 12 months?
I think it is just managing the cash flow because I think there is just a hiccup in receivables during that time too. Obviously, a lot of deals, the seller's keeping the old AR, so it's really just the new that you're working on. So you do have, kind of a gap in cash flow. Anyway, that's why you need so much working capital. So just watching the bank account just go down so fast during that first month or two, and you start with maybe more cash than anyone's seen in their bank account ever, and then it goes down to like a low number within the first 2 to 3 months as you work through that transition and that hiccup and kind of collecting receivables. And we had someone call us in a panic not that long ago, and he's like, we're gonna run out of cash, we need to get more money. People owe you $500,000, like pick up the phone, like we'll start picking up the phone for you too, like we'll do this together, but like we're not, one, like we just did a big SBA loan, we probably can't get more money. So, and two, like let's just go collect what we're owed, and that will get us through. So I think that's like really scary, watching that bank account go down, and then making sure that the customers stay, which we've had really good luck. We haven't had too many instances where we've lost any major customers right after. The same with employees. We've had pretty good luck. We had one business that had particularly bad luck though, and one, a lead tech left right after the acquisition just to go work with a buddy, which it was, fine. Like we got through it. And then the lead salesperson passed away suddenly, just overnight. And those happened within kind of 3 weeks. So, within probably the first 2 months of closing, we had lost the lead tech, we lost the lead salesperson, and you had kind of a human tragedy within the company. So that was a real, welcome to business ownership moment for that operator. Then that's where things get real.
Yeah, yeah, yeah. It's wild. Then again, goes back to people think that you can just run something absentee and it'll just run by itself. And no, it doesn't. It doesn't go that way. And you really need to be prepared and have enough working capital. And anything that you could ever imagine that could go wrong most likely will some point in time when you're running a business. It's never just smooth and easy operations. So I know we've had some great deals. We've had some stuff that's been a little crazy. Once you close, without giving away too much information, maybe tell me one or two kind of wild stories of things that you've had happen.
Yeah. So I mean, we had one deal. It was a gym, and gyms can get revenue from insurance companies. So you'll get paid per visit. Programs called like Silver Sneakers is one of them. And we did the diligence. We went through, verified that this business was taking in the cash that they said they were getting. But what we found out right after is that the seller was making fake entries and sending them off to the insurance companies. So if someone came through the gym once ever, then they were going to come in the max time allowed in perpetuity. So they came once in 2020. He booked it as 10 times a month for every month from then on. So basically, all of the profits were from that exercise, which was tough because in the diligence process, like everything was there. That obviously got in trouble pretty fast because like we're not going to keep up that practice. And it was just funny. He trained the owner on how to do it. Like he didn't even think there was anything wrong with it. And he's just like, well, those insurance companies, they're always out to get you. Like we got to get ours back from them. And so he just thought it was fine. So That one, we're in litigation for that. I mean, hopefully there'll be a good resolution to that. But that's the ugly side of it. I mean, there's no due diligence that can, if someone's going to commit outright fraud and lie, like there's no due diligence that can catch that.
Yeah, I think we all try to get into it enough to really understand the deal, and the diligence has gotten like night and day better than it was 10 years ago. A lot of people are kind of bringing their large M&A experience into the small deals, and sometimes it's a little bit overkill. But yeah, no matter how much you do, like unless you would have really gone through all these insurance statements and then called those people and said, "Did you actually go to the gym?" Like, how are you going to know that? So again, it's a scary thing, and there's a lot of things that you need to look out for. So, maybe if you got, I think you were going to start another one, so I'll let you go ahead and finish your thought.
Well, yeah, we've had two bad ones, and then yeah, we had another one, the trucking routes, and there are some issues that really came up within the business about a month within closing, where they pulled out of some routes and basically cost us about 20% of the revenue, which is again most for most businesses, that's most of the profits. So that business is in trouble. We've gone through, our team went through and calculated the damages to the penny. It was a little over $2 million in net damages that we can prove, we have fully documented. That one they want to settle, which is good. So hopefully we can get that settled pretty soon, so that the company can kind of move on. We'll have to pay down our loan and cut our loan payment. So you'll get one of those dreaded prepayments, but if that works out, but prepayments better than the alternative. Uh,
Absolutely.
but really the thing that we've learned from that is, so now we do the reps and warranties insurance, and it is interesting. A lot of our partners always, when it's time to pay the bill, so for about 1.5% of the deal, you can buy two insurance policies. Basically, one covers if the seller like accidentally misrepresents anything, or if there's any tax liabilities or legal liabilities outstanding that they didn't know about, that'll kick in. And then there's also a second policy that if they willfully commit some type of wrong. So now it's an absolute requirement in every deal that we do, that we get that reps and warranties insurance. And everyone they don't want to do it when when the time comes to pay the bill, because it's a one time upfront at the closing. But having seen what happens when a deal does go bad, like to be able to insure a deal for 1.5% of the price, I mean, I don't know how much longer the insurance companies are going to offer it, because to me that's very mispriced insurance, and I will take that all day every day.
Yeah, especially as a guy that has studied analyzing things and risk versus reward, right? It makes sense. Things can go wrong. Hopefully they don't. There's plenty of other very successful stories that we've got that are great. Now kind of going back to the very beginning. So you've studied financial analyzation. I'm sure you know a lot about kind of the markets, interest rates, how things are going. Maybe give us an idea of what you think is going to happen in the near future. We have a new administration. We've got a lot of things going on with the economy. One of the major questions I get on a day-to-day basis is what's going to happen with interest rates, and then sort of maybe what you think is going to happen in sort of our industry with people continuing to buy small to medium sized businesses.
Yeah, so I mean, I think yeah, within our industry, everyone cares, what their rate's going to be on the SBA loan, which is directly tied to the Fed funds rates, right? Prime's based off Fed funds. SBA loans are prime plus a spread. So it's going to directly flow into Federal Reserve activity. And I mean, one thing that I think a lot of people have gotten wrong here is that obviously we just implemented tariffs on Mexico and Canada, and there's this kind of idea that that's going to cause inflation. Typically, the way the Fed reacts to inflation is that they raise interest rates. But really, tariffs aren't inflationary. I went back at the last like 500 years of tariffs being implemented throughout the world. All but one instance actually led to deflation, which is much worse than inflation. But so for the small business world, that could be worse. But for interest rates, I think it would say that the narrative that interest rates might go up because we've implemented tariffs and tariffs are inflationary is wrong, because tariffs aren't inflationary. So it raises the price of one good or service, but there's less money to go and buy another good or service. So essentially, you raise the price of one thing and you lower the price of another thing. So inflation is typically caused by central bank activity, not implementing tariffs. So from an interest rate perspective, it's not a big concern, and it probably actually means rates are going to go lower because it slows the economy. Is that total demand across the economy goes down when you implement tariffs, which is deflationary, which is really bad for small business. It'll be good for pushing interest rates lower, but it generally, the slowing of activity is why the interest rates are going lower. So I think this morning I saw the Fed fund futures are pricing in three more cuts by the end of the year. So 75 basis points or 0.75% in between now and year end is kind of what the market's looking for. Probably about right, because we will see some slowing. Because what we are seeing from a policy perspective is things that slow the economy are happening first, like tariffs. Doge, even if it's waste, fraud, and abuse, that's someone's paycheck. So when you cut that, it reduces economic activity, which is where essentially like they have to do a Doge dividend to offset that effect, and potential tax cuts that might come later in the year. So we've got all the bad things up front, all the good things later, which does kind of put a little air pocket in the economy, which obviously most small businesses are, they're more at risk than the Fortune 500 company to those air pockets. So that's something that we're watching for. I think there is good news on interest rates coming from, but are coming in the future. But be careful what you wish for. I'd rather have a booming economy with higher interest rates than a weak economy with lower interest rates.
Yeah, yeah. Unless that pocket isn't very long and you can kind of take advantage of it. If you firmly believe that not only are rates going to be down, but on the backside of that, you may have some cuts. You may have a dividend, as you kind of mentioned, and so the business may end up, realizing that gain and coming back around. But if you buy it during that kind of dip, it might be a good opportunity. But obviously, not all of us know exactly how things are going unless we rig the market, and we can't do that. Um, so to kind of summarize, your kind of understanding or what you think is going to happen is most likely rates are going to come down by the end of the year. We're probably going to see some slowing in the economy, and hopefully, within what 12-18 months, we'll kind of see some of the benefit of maybe some of that happening.
Yeah, we think it'll be relatively short-lived. Like I said, more of an air pocket than like a recession or anything like that. And if you could look through it, all those activities are meant to bring longer term growth. So, if you get through the short term pain, you can be there for the long term gain.
Yeah, and at the end of the day, we really do need to address the issues that we're having in the government with their spending, and if we don't address that, it's going to continue to be a ticking time bomb. So why even talk about business if we're going to end up imploding as a country, right? So, yeah, like you said, a lot of that spending does drive some of the economy, and it appears that a lot of it was more international spending, and so you would hope that a lot of that will kind of come back on shore, and hopefully it'll drive the kind of the exporting rather than importing, and we'll see how that goes. But and then if you had somebody that maybe is nervous about what's going on or what's going to happen with tariffs or with rates, inflation, all that kind of stuff, what would you tell them? And then also, what do you think is going to happen inside actually like our industry of buying small and medium sized businesses?
So, I mean, for most of our customers, or our partners, it's really just stay focused on the customers. Like we've discouraged people from trying to like pre-order to beat the tariffs. Historically, when you try to do things like that, you just end up overpaying. So like you're basically just gonna end up loaded up on overpriced inventory that you're just gonna have to liquidate later on. So
Well,
like
right, because again, it goes back to squeezing your cash. Your cash is the most important thing in the business. If you get too heavy on your inventory and you don't have cash, then you're gonna go sell it at a discount. It's like that's how I trade stocks. I buy them high and sell them low. But Otherwise, you're not supposed to do that.
How most people do it.
Yeah.
Yeah, yeah, just kind of keep focusing, keep doing what you're doing. I mean, try to, you know, you've got to work that much harder, so what work might have produced growth might just produce, flat today, but things aren't linear. Like, and you see it in public companies and private companies is a lot of times you'll just see things are flat, and then you get just periods where things like really start to take off and you see an uplift in revenue. So if you just keep doing the right things and work through it, it sucks because you're working harder for the same, but once you get to the other side, you'll see, the rocket ship to the upside. So really focusing on that. Yeah, cash is king. Yeah, making sure you're doing your cash collection. Don't overbuild inventory. You'll get through it. I mean, it's stressful. Control what you can, which is, I mean, that's we talked to that with during the loan process a lot. It's like, let's not get stressed out about something we can't control. Let's stress out about the things we can, and how can we impact it? What can we do to change this? If it's nothing, then it's not worth stressing over.
Yeah, and again, that's probably the same thing in relationships. Uh, yeah, it's been great. So, do you have if somebody asked you what industries do you feel like are hot or going to get hot or kind of ripe to start going after, how would you answer that?
So that's where we try to avoid looking for a hot industry. Any industry can be good with the right person in it, and any industry can be bad with the wrong person in it. So like we have restaurants. We're working on two restaurants today, actually. So two more, but they're with people with really strong restaurant backgrounds. And so, I know there's this, lot, almost every video out there is going to tell you like never to buy a restaurant. And probably for 98% of the audience, that's probably great advice. Maybe 99% of the audience, that's great advice. But there are people that are good at running restaurants. If your background is running a restaurant, you probably shouldn't go buy an HVAC company, which most people kind of view as like their favorite industry. So it's really fitting in, and it's so common. We get people that come to us, and it's like, oh, well, I've got 20 years in the IT industry, but I don't want to buy an IT company. Well, you should like you should buy an IT company. So sticking with what you know and your strengths, I feel like the movement from employee to business owner is a big enough change that if you can do that without changing industries, you'll probably have the most success. So our answer is whatever industry fits the buyer is the hot industry at the time.
Great, great answer. Yeah, I totally agree with you. This has been great. I mean, it's been a lot of really good information. So I always ask two questions at the end. So first one, do you have a mentor or have you ever had a mentor?
Not really. Like, I've had a few people that were pretty influential. I mean, so I guess I have. So I have a brother who's 14 years older. I mean, I probably wouldn't be doing this if I hadn't kind of seen him working in the financial service industry and kind of following along. So, he definitely paved the way, and helped me kind of accelerate my career too, because I had someone to follow versus most other people just have to figure things out. I could just kind of take his lead. When I worked at a hedge fund for a while, one of the founders of that firm, he just had this amazing ability to just break down every business model to its like most simplest form, and just kind of imitating him and figuring out whatever the business is, just kind of being able to just break it down to that really simple, um, uh, you know one sentence explanation of an extremely complex business. That was pretty influential, and it had a director of equity research that I worked for that kind of really just digging into things and looking at history, and having that deep knowledge managing in public stock portfolios. People think you look at a chart and buy it. It's like, no, like you're meeting with the CEO, you're meeting with the CFO, like you're digging in really deep into the strategy. You're deciding, you're the 25-year-old looking at the Fortune 50 CEO saying their strategy is good or bad. Going through and kind of breaking things down like that.
Great. Yeah, awesome. So, okay, final question. You've been successful, right? I mean, you've named off several things here that you've done in industries that people would never even be able to kind of come close to getting into. So, and then you continued to be successful. So what motivates you? What drives you to be successful?
And the total inability to sit still. Um, and I mean, my work is my hobby. Um, I like doing it, which helps a lot. I mean, my wife Katie, she's always, Christmas Day, the kids go off and play, and I'll just like go back to my desk and start working on something. And it's usually a lot of the times it's the thing I want to be doing. So, I mean, finding things that you like doing, so it never really feels like work, has helped. um, I've always done multiple things at the same time. I've never done like one traditional role at the same, which has helped a lot. So in 20 years, you have 40 years of experience, uh, which is helped because some of it comes down to doing the things that other people don't want to do. I mean, I didn't go to an Ivy League college and got into roles where I was the only person at the hedge fund that didn't go to an Ivy League school. And some of that was just putting yourself in the right position. Like, this is what I want to do. This is what I want to be. I'm going to do whatever it takes. If some work needs to be done that no one else wants to do, like, I'm going to go do it. And that's almost how owner actions, in a way, is that I'm saying it out loud. Like, we do the search. Nobody wants to do the search. Like, the searching's hard. Like, you're coming in at the very front. Like, everyone wants to be there at deal time. Deal time's great. Everybody gets paid. Like, whether you're representing the seller, you can get a big commission. Accountants, the lawyers, like, there's all kinds of money to go around when you come to deal time. But during the search, there really isn't. So no one wants to be there. So it's like doing the work that others don't want to do.
Yeah, harnessing that ADD can be very powerful.
Yeah, I'm extremely ADD.
Yeah, yeah. Those of us that can't sit still, usually, if we can find a way to harness it, we do pretty well. So,
Yeah.
it's been great to have you on. A lot of very valuable information. Where can people find you, and how can they get in touch with you?
Yeah. So we've got our website, owneractions.com. Definitely check out our TikTok, Owner Actions. And for people that don't like TikTok, we post our videos on YouTube. We don't like pushing people there because we don't have as much of a following on like our glamour numbers on TikTok. But that's really the best place to find us. We always like it. It is weird, and I know you're trying to wrap up, but we've only really had great success with people that come to us after following our TikTok channel. Referrals never really work that well. It's like people that have kind of watched and learned, and probably people that watch your podcast end up being the best clients. It's the people that get referred to us that maybe haven't done the background and the education. Almost never, we never end up closing a deal. So it is interesting that you say that. We always prefer someone who's watched our TikTok than to a direct referral.
Yeah, they're essentially doing their homework, and then ready to move forward. So that I never thought about that either, and it I can see it as well when people come to me and say, "Hey, I've been following XYZ and I've learned a lot from it. Here's my deal. I'm ready to go." And I'm like, "Whoa, okay, this is put together the right way, and let's go." So yeah, it definitely makes sense. So hopefully people will check that out. Check out your YouTube, your TikTok. Get in touch with you. Really appreciate you being on. I hope everybody enjoyed this episode. Feel free to check us out, like, subscribe, all that fun stuff, and definitely check out Mark as well. Thank you.
All right. Thank you.
Thank you for listening. We hope you found this podcast informative and helpful. Please don't forget to subscribe on your favorite podcast player. For more information, or if you'd like to discuss a transaction, please go to www.jaredwjohnson.com.